are in listen-only mode.
Hello everybody, and welcome to this month's Grow Your Law Firm webinar. My name is Matt Sleater. I'm the lawyer's accountant. I do a lot of work with legal firms in terms of acting as their accountants and also in terms of helping them develop and implement their strategic outcomes. So today's topic is on building your revenue. At FWO Chartered Accountants, we focus with our clients to ensure they're financially well organised, and as part of that, help them develop and implement strategies to drive profit and cash flow as part of their business plans. So today's topic very much fits within our business planning activities around being financially well organised. So just before we get started, I'd just like to take a couple of quick polls to see who's online. So if you could just tick the appropriate box and let me know what best describes you. Sole practitioner, you're in a 1 to 3 principal firm, or a 3+ principal firm. In saying that, there's about 95% of firms in Australia are in the 1 to 4 principal category. So just another couple of seconds on that one. So thank you very much. So today we've got 42% in sole practitioner firms and another 42% in the 1 to 3 principal firm. So thanks for that. Just another quick poll. Just to let me know what sort of role you play within your firm. I just want to make sure I can tailor our content today to the majority of our audience. Fantastic, so thank you for that. So we've got about 2/3 or just under 2/3 are principals. So welcome, and solicitors, non-principals, and of 24%, the balance being practice managers or CEOs. And the very last question before we get into it, have you attended a Grow Your Law Firm webinar in the past? Because some of the topics and discussion points we'll go through today will have some reference to prior webinars. And if you haven't attended before, of which we've got roughly half today, then you're able to go to our website at financiallywellorganised.com. Click on the latest up the top, and then select webinars, and you'll be able to go back through all of our webinars over the last couple of years and obtain some great relevant information that you'll be able to use in your practice. So let's get on with it. Just one last little bit of advertising. On Monday, next Monday, my long-awaited book, The Revenue Revolution for Law Firms. We're having the official launch via a webinar on Monday, 12 o'clock Queensland time, or 1 p.m. Southern States time. So if you want to register and hear more about that, please just go to our website, financiallywellorganised.com, and you can register there. So, building revenue. This is what I see in most legal firms. Most legal firms adopt an approach of what I call squeezing the orange. They spend most of their time doing the work. So this is that production and delivery part of your practice. And because they're constantly doing the work, which they need to do to be able to charge their hours, bill their clients, they really don't spend much time lifting their heads up above their desks and thinking about what other strategies they need to do in their practices to drive their revenue. So the activities in a squeezing your orange model, the other revenue activities are very much ad hoc. I call it the squeezing the orange model because if this is the approach that your business takes, then what that will mean is you can only squeeze that orange for so long before it runs out of juice. So what you need to be doing is you need to be thinking about what those other strategies are. So this is a more appropriate strategy. This is actually a strategy for every business, right? Whether or not it's a legal firm or an accounting firm or any other professional services firm, it applies to retailers, wholesalers, everybody. And what you need to be doing in your firm is you need to really be focusing on the two key areas from a revenue perspective. The first area is how you win the work. And when you go about winning the work, you're focusing on developing systems and processes in your practice so that that work keeps coming in from the clients of the type that you want to have, of the services that you want to provide, and that you maximize the amount of revenue that you generate from each and every one of those opportunities. So that's what I see is missing in firms. What I see happens in firms is this part of doing the work. So how they go about, opening the file and working on the matter and finishing the matter and then billing the client. They also manage the relationships. So if we break this down a little bit further, the 5 key revenue strategies in every firm need to be around your product. So what it is that you sell, marketing, how you communicate the message around what you sell and what you do in your firm to your targeted market, be it existing clients and prospective clients, and what processes you implement to ensure you maximize the conversion of those inquiries to actual sales, to getting instructions, to signing the costs agreements. So that's what you need to structure in your business, winning the work. But what happens in your business is you focus on doing it. So you've got all these great systems and processes around how you physically do the work. So this production and delivery part of it here. And then also how you manage the relationships so that those clients keep coming back to you. But when they come back to you, usually they're coming back to you just when they've got the idea that they need something done, not necessarily for you initiating activities that will ignite needs in them that you can provide additional services to them. So what you've got to be focusing on in your practice is you've got to be focusing on not just having your systems so that minimises risk and produces a consistent legal output for you and your clients, but you also need to be systemising your business so that it produces consistent inquiry of the type of clients you want to have, of what you want to be selling to clients, and converting those. And that's what we're going to be speaking about today. We're going to be focusing on not the doing of the work. That's a whole nother topic. And if you want to go back to my last month's webinar on fixing your profit and cash flow, I spent most of that webinar on looking at these production and delivery activities that you've got to do in your business around the right KPIs and getting returns on your labour cost and how much revenue you need and all of those sort of things. So go and have a look at that. But today we're going to be talking and focusing on how you win your work, how you systemise that so that it can produce predictable revenue results for you. So in your practice, there's 3 different types of revenue, and they are recurring revenue, reactive revenue, and proactive revenue. So with your recurring revenue, it's revenue like retainers. Probably the best comparison I can have of that is comparing it to an accounting practice. So the revenue we generate from the preparation of financial statements and tax returns for our clients, trust account audits and so on, that is a recurring revenue nature because it's got to be done year in, year out, so it's going to be there. Most firms, accounting firms, by the way, don't treat it like a recurring revenue nature. A revenue, they do it and you get different bills every year. We actually do ours in a way where it's fixed price and you pay it by a monthly direct debit over 12 months. So it really is recurring. But in legal firms, there's a very small percentage of your revenue that you'll be able to generate from recurring. Reactive revenue is that client-initiated revenue. So where the client gives you a call and says, I need you to do this. I'm buying this property. I'm wanting to get divorced. I'm doing this. I'm doing that. It's the revenue that just comes in despite any activities that you implement in your practice. they've been a client forever, so they just give you a call when they need you. Somebody has been referred to you by another client or a colleague, and they just walk in the door. But generally, there's no specific activities that you've implemented in your practice that are going to drive those revenue results being achieved. And that's what proactive revenue is. Proactive revenue is the revenue that you generate from your practice that you actually plan to generate by implementing specific activities around specific areas of law. I call that product, where you market those activities and you receive inquiries and you convert them. So proactive revenue is very much this winning the work. Okay, so it focuses on what you do in your practice to ensure the revenue comes into the firm. So I'd just like to take another very quick poll at this juncture, and I just want to get a bit of a feel for your firm around how much of your revenue is reactive revenue. So it's the revenue that just walks in the door, that doesn't come into your practice because of specific marketing and sales strategies that you implement. So this is the revenue that the client just gives you a call. Okay, just a couple more seconds. If you could just click on one of those options. Fantastic. Thank you very much. So what we've got in terms of people listening today, about only 7% are saying all of it's reactive, which is very encouraging. Because only a small percentage. About 48%, so about half of the listeners today are saying that most of your revenue is recurring. So you do a few activities that produce some new revenue. Roughly a third says about half, and then only 7% says not a great amount. So if we break that down a bit further, what we're actually saying is 93% of the revenue that is generated in your practices each year, only about the vast majority of that revenue in total is going to be from a reactive nature. So I just want to give you something else to think about now. So in your firm, if you've got a reliance on recurring revenue. Recurring revenue is something that you cannot control. You cannot determine when a client is going just to give you a call because they've got a transaction, and you can't quantify it. So if you're thinking about, I just got mixed up there myself. Recurring revenue you can control and you can quantify it because you know when it's going to come in. So if you're on a retainer, you know that money's going to come in, that revenue is going to be billed each time. But it's only a very small amount of your revenue when you're sitting down planning what your revenue is going to be for a year. If you think about reactive revenue, you cannot control when that revenue is going to come in because you don't know when that client's going to call you. You cannot quantify it because you don't know what the transaction is going to be. With proactive revenue, you can control it and you can quantify it because you can control the activities that you implement that are going to drive inquiry. So maybe it's a bit difficult to work that out to start with. But once you've implemented strategies in your practice that systemise and focus on driving inquiry in, you can do and predict, from those activities, you can predict the amount of revenue that you're going to generate. And you can quantify it because it's determined by your pricing that you're setting for those matters. So thinking about control and quantification, here's just a couple of things to think about. So first of all, you might have come across this at some point in time. Look, I'm not really a religious person, but for me, this has just been one of the little sayings that I've used throughout my life, both in business and personally, to sort of try to keep myself focusing on the things that I should be. And that's, grant me the serenity to accept what I can't control, the courage to change what I can, and the wisdom to know the difference. So what it focuses on is if you can understand the difference between what you can control and what you can't, but you focus your efforts and energy on the things that you can control, you can then actually determine what an outcome is going to be. And secondly, Einstein defined insanity as doing the same thing over and over again and expecting a different result. So what I see in firms, and I see this all the time in the firms, I'm looking at up to 5 and 6 different firms every week, and what I see in these firms is that they have this concern about the amount of revenue that they generate. They have concern around where the revenue is coming from. But what they do is they live in a world of relying, on reactive revenue. So, they're living in a world that they can't control. So their revenue, when they plan out, they might have a labour cost of $500,000, and they think, well, we need to generate at least $2 million worth of revenue out of that to be able to produce a good profit, or 200,000 we need to produce $800,000 worth of revenue, but they have no idea where that revenue is coming from. So they live in this world that's not very serene, because they are in no control of where that revenue comes from. But in saying that, the revenue from a reactive strategy will still come in the door. So if you're focusing on proactive strategies in your firm, they are the activities that you can control. So we're talking here about the specific activities for winning the work. So you can control those activities and produce the outcomes. So when we look at your revenue, those 3 key areas on your revenue strategy are the proactive revenue strategies, where you are just doing the work and it's coming in from clients without you actually initiating anything. Then I call that reactive revenue. So to build the revenue in your firm, what you need to be focusing on are the key actions and the key strategies that drive additional revenue. The key actions are product, marketing, and sales. So I just want you to hold that thought, and I'll come back shortly to what's in each of those areas and things that you might want to be thinking of. But I want to present to you another formula, and this is the revenue growth equation. So when you think of generally, and this is what most firms think of, when they think of how they generate their revenue, they very much focus on how many hours do we have to charge per day, per person, at what rate, and how much do we have to cover. I call that the charging hours equation. And that equation is extremely valid because it's based on your time billing system. You need to have your people charging the right amount of hours out, so that at the right rate, so you're generating your levels of revenue. But when you break that down, unless you are winning the work, so in the proactive area here, your people will not have the work to do. So just going even back another step, and unless you're winning the work, you can't do the work. So it makes sense that what you've got to do is you've got to build systems in the business so that you can proactively drive and the results to do the work. So when we develop your revenue strategies for your firm, we've got to be thinking about it on a matter by matter basis, not on an hours basis. An hourly basis is how we do the work, it's how we ultimately bill. But what we've got to be thinking about is, how many clients do we have? And how many new clients do we want to get in the next year, say? With all of our existing clients, and plus those new clients, how many times do we want those clients to be working with us? How many matters do we want to open per client per year? And for each and every one of those, that's a transaction frequency. For each and every one of those matters, what's the average matter value, the average sale? So if we're able to develop and design strategies that are proactively driven within your firm, that focus on generating additional revenue from existing clients, bringing in new clients of the type that you want to have, increasing the number of transactions that each client does with you, and increasing the average value of each matter, then what you're able to do is you're able to predictably produce your revenue. It takes time to get the momentum going, But once you get started, you'll find that your specific strategies that you implement in your firm will produce the outcomes of new revenue for you. And then lastly, it's the margin. So we've got to, if we go back to my last webinar on fixing profit and cash flow, we talked about gross profit, and that's the difference between your direct labour cost and the revenue you generate out of it. So margin here is how much of that revenue you still keep after you're paying direct labour for fee earners, excluding principal salaries. So if your labour cost was 25% of your revenue, then your margin's 75%. But what we're talking about here, more importantly, is around those first three items. Number of clients times transaction frequency times average sale. So when you're focusing on what you need to do in your practice, you are going to have different strategies that impact on your matter count and impact on the average revenue you generate per matter. So we've really got to have a look at how we combine this revenue strategy, so the different plans that you've got to implement around product, marketing, sales, production and delivery, client relationship management, with what they impact on in terms of driving these key numbers in your practice. So the more clients, the more times they buy from you, and the more they spend with you each time they buy, is the key to driving revenue. So let's look at both of those together. So I call this the revenue matrix. So if, as part of your revenue growth equation, you want to drive your number of clients. So how do we get new clients? Well, first of all, you really can only focus on two different strategies. What are our marketing strategies and what are our sales strategies? By creating a new product, it's not necessarily going to produce any new revenue from new clients. The only way to do that is to get appropriate marketing strategies in place to generate interest and create inquiry. And then the sales is the process for converting those and signing them up. So you need to just be focusing on marketing and sales activities to drive new clients. If you want to increase your transaction frequency, so per client, be it existing or be it a new client, what you need to focus on is you can focus on a range of different activities. And mind you, these all work simultaneously together. So first of all, you can create a new product. Now, when I talk about product, I'm not talking about, something like a stapler or a phone. What I'm talking about is a specific solution that you provide to your clients. So I'm going to use an example shortly around how you can work out some numbers and then develop your strategies around driving a proactive revenue strategy. But I use an example in there. It might be an estate planning review for a client, or a business risk assessment. So you create a product, and then you can go and market that to your clients, and then you can convert them. What you also need to be doing is, the more closely and the better you manage your relationships with existing clients, the more likely they are to keep coming back and buying from you. So you need to think about what are our actual activities from a product, marketing, sales, and client relationship management perspective if we want to increase our transaction frequency with clients. If we want to look at our average sale, what we can do is we can implement a product strategy so that each time we open a matter for a client, that we actually are taking them through a process where they might buy a number of different solutions from us. A good one that I often see with firms is where you've got a family law firm, and that family law firm might also do estate planning. And so an example of that is they sign them up to do their wills at the conclusion of their property settlement or before then. And so what they do is they've got a couple of products, effectively, a couple of solutions that they effectively sell to their clients at the same time. So it increases the average sale. Then you've got to implement marketing strategies to create inquiry, convert those inquiries to sales, and then manage the relationships. The stronger the relationship, the more trusted advisor you become, generally your clients then become less concerned about fees. Completely different topic though. And lastly, margin. Your margin, meaning how efficiently you do the work, and how much you make, that difference between what you bill them and what it's cost you with your labour cost, they can only be impacted by your sales, so the amount you sell it for, and then how efficiently you do your work. So if you're wanting to drive revenue that is focused on increasing your number of clients of the type you want to have, increasing your transaction frequency or the number of matters, or increasing your average sale, you need to be focusing on all of these actions in the right sequence: product, marketing, sales, and client relationship management to produce that revenue. So let's just go through each of those in a little bit detail. So just to give you an overview of what you need to be thinking about. So product's basically what you sell. Now, I have this conversation with firms nearly every day of the week. So I ask them, what is it that you sell? What is it that you do for clients? And we're lawyers, or a good one that I hear often is, we're a commercial law firm. Well, that makes sense if you're a lawyer, but your clients haven't got a clue what a commercial law firm is. As a chartered accountant, I understand that because when I work with my clients and they need legal services, then I understand I need to, for specific transactions, refer them to a commercial law firm. But for the general public, for a lot of consumers, they don't get what that means. So what product is about focusing on making sure that your information that you produce aligns to what the solution is that you provide for your clients, so that they can understand it and they can get it. So you've got to be focusing. If you want to create content, focus on the things that you're good at. Focus on the things that you're passionate about. And if you can create product and solutions for clients, which is the stuff that you really get a buzz out of, and you just did that, you will find that the revenue just continues or starts to just flow in the door, because people feel that. So you've got to actually define your product, and it needs that definition, because the more content that you produce that explains what you do, it makes the marketing activities in your firm so much easier, because you can clearly communicate the message. And if you can't communicate the message, it's very difficult to create client awareness so that you are then able to sign them up and sell to them. And you've got to remember, you can't be all things to all people. So if you're interested in having a look at some examples of content, just hop onto my website at financiallywellorganised.com and go to our latest section. And in there you'll find, or there's a resources section as well, or tools I think it might be called, and you'll find in there a whole pile of white papers and blogs and articles and webinars and different things. My book, The Revenue Revolution for Law Firms, is a perfect example of product. So you can buy that, and it covers off all of this stuff. It covers off everything that you need to be doing in your firm to focus on driving profit and cash flow improvement, proactive revenue, reactive revenue, and so on. But that's content. Someone can buy that and understand what it is that I do with firms. So product's critical. Secondly is marketing. And marketing is designed to create inquiry. Nothing more, nothing less. I've got a picture of a tap up there, because marketing is probably one of the most misunderstood functions in any business. A lot of people think you just go out there and advertise and you do some activities and it all starts rolling in the door. But marketing's not like that. And most people, by the way, turn this tap on when they need the work. But from a marketing perspective, marketing takes time. Marketing takes time to engage with and work with the target market that you have. So marketing is a tap that you turn on, but when you turn it on, you never turn it off. If it gets so busy, which is fantastic, because it means it's working. You might turn the tap down a bit, but you never turn it off, because the minute you turn it off, you've got to wait for that lag time before it starts again. So what you've got to do from a marketing point of view is develop a marketing strategy that is low cost, that's specifically focusing on engaging with your target audience, be it your existing clients or your prospective clients, and you're doing that in a way that is specific to them and engaging personally with them. I'm not talking, there's two sorts. There's brand awareness, which is like your billboards and your website generally, and advertisements and so on. They don't produce specific inquiry for you. What to get structured, predictable inquiry, you need to know who your prospective clients are. You need to know who your existing clients are, and you need to communicate with them in a structured and organised way, where at some point in time you'll call them to action around a product or a solution that you're wanting to provide to them. So just at this point, next webinar, I think it's on the 12th of December, and you can register for it now at financiallywellorganised.com. It is I'm going to dedicate an entire webinar to marketing for legal firms. And what I'm going to do is I'm going to show you using my own marketing activities that I do in my firm, to use that as an example of how you go and generate a marketing plan and implement a low-cost marketing strategy within your firm. So register for that one, and we'll go through that in a bit more detail. Now, for sales is just about a process. So sales is basically taking an inquiry and then taking that inquiry through a process where you control the process so that you actually close the sale. So I've just got an example there of a very simple sales process that I use for some of my sales activities, where an inquiry will come in. Then what I do is, out of that meeting, I BAM-FAM it, which just means book. I want to book a meeting from a meeting. So I book a meeting where I'm going to then talk further with that prospective client or existing client about their needs, and just keep taking them through a process so that I get to the point where they say, yes, I'd like to proceed, or no, I don't want to. So what sales is a structured process that you've got to implement in your business that maximises the ratio of inquiries to closures and maximises the average sale. Most businesses don't do that. Perfect example for some firms. When an inquiry comes in from a client, it often goes, or a prospective client, it often just goes to whichever lawyer is available at the time. And most lawyers, just like most professionals, are technical people, and they don't have sales skills. So opportunities get missed, where part of your structure is to ensure that within your practice, your your inquiries are captured and directed to the right people who follow a process to maximise the output of those inquiries. So that's basically a quick overview of sales. Once again, there's webinars on sales process if you'd like to go and have a look at them. So where do you start? I say to people, if you want to drive your revenue, what you've got to do is start with your existing clients first. And the reason is because they've already had an engagement with you, they've already worked with you, they already trust you, they've already had a good experience. And that will be the case in most instances. And it's another interesting question that firms answer when I ask them. I say, how many clients do you have? They say, what do you mean? I said, well, how many clients are on your database? Oh, thousands. So I say to firms, what you've got to do is you've got to harness that. You've got people there that you might not have spoken to for the last 5 years or more, but you don't know if they've had legal needs. You don't know if they've had changes in their circumstances that require you to provide them with some solution. So you start with your existing clients first. If you don't have a database or you can't extract a database of your existing clients, what I'd suggest you do is go back over the last 3 or 4 years, take a list of every client matter and see get your email address for them and other personal detail, and just start with that. but start with your existing clients first. And what you've got to be focusing on when you're developing a proactive revenue strategy for your existing clients is focus on selling them existing products first to existing clients. The reason is that you already know what you're doing. So if you're and look, this can be a little bit trickier for specialist firms where they have really a single transaction, like a PI firm or a family law firm. But you can still do things in this area. But focusing on what it is, what are those things that we do for our clients, and then focusing on selling those things or those products to your existing clients. Once you've exhausted that, and also you should be doing this whilst you're as a new client strategy as well. Focus then on selling and developing strategies for existing products to new clients. So don't go and try to create something new that you're going to sell to all of them or market to all of them. Focus on the things that you've already got, because those solutions are tried and tested. Then you move on to new products for existing clients, and then new products to new clients. So focus initially on existing products, existing clients, then new products. Existing products to new clients, then new products to existing clients, and then new products to new clients. I talk about return on energy, and basically your clients have already got that relationship. So you have put less energy into generating revenue out of existing clients than you do generating revenue out of new clients. So focus on that. So when you're driving strategy in your firm and looking at those three proactive revenue areas of winning the work, this is basically how it works. It's all a process. So if you define your product so that you know exactly what you're selling, you can then create marketing activities over multi-channels, and we'll go through this next month, but a multi-channel marketing strategy using the same message but over different channels. And what I call a channel is the different ways people receive information. So on your website, via a blog, using emails, direct mail, social media, even some brand awareness strategies like your advertising and so on. But you create the same message, but you focus on delivering that message over many different ways to a specific target of people, existing clients and prospective clients. So out of those activities will drop leads, so inquiries. And then when you receive that inquiry, you qualify it, turn it into an opportunity, which is when someone says to you, I'd like to really consider buying from you. You take your client through this sales process so that it drops out the back in dollars. Now, look, the whole thrust of this is to develop systems and processes in your practice that drive predictable outcomes around revenue. And so it's just structuring that in exactly the same way as you structure any other activity in your practice. So let's look at some numbers to see what this might look like. So I've just put together very simple structure here for a proactive revenue strategy. So I'm just using a commercial firm here, that provides general practice services to businesses and individuals. So what they've decided to do in this particular firm is to have two separate product strategies for the year. One of them is to make sure that they are reviewing all estates as much as they can, marketing estate planning reviews to their clients. And then out of those estate planning reviews, so that might just be a specific meeting or questionnaire or report or some simple thing that gets produced. Out of those reviews, they then look to do estate planning work, which may be some updating of company constitutions, getting their wills in order with testamentary trusts. It may be that they need to look at some restructuring of affairs for clients and so on. So they create a new product, which is an estate review that then leads into more work. And then they also do another product called a business risk review, which might cover off areas like employment issues, terms and conditions, trademark issues or IP protection, a whole range of different business risk issues that they may have in their business, where they structure a product around that and then look to generate additional revenue. So with this particular firm, they already know that they've got a recurring, their reactive revenue that's going to be coming through the door. So they're focusing on what other activities they're going to implement in their practices over and above that reactive revenue that comes in. And these are the two areas. So this particular firm has 1,500 current clients. So they might have gone back and looked at their database over the last 3 or 4 years and said, well, they're our current clients. So we're going to focus on marketing them because they've had a more recent experience with us. And they've also decided that they want to get 100 new clients from an estate planning perspective. And they're also wanting to say we want to get 26 new clients from a business risk review. So they've got their database, they focus on and they understand who their new clients are, existing clients are. They've then developed a clear target market and database that they'll create maybe in their geographic area for who they want to have as new clients, and then developing the marketing activities to drive that. So in this particular firm, they've set some numbers. They've said for an estate review, we're going to charge our clients $750 because these are usually quite sophisticated clients. We're not talking here about just the general mum and dad who has a simple will. And out of those, we're going to expect an average of estate plan implementation strategies, which might be new wills, changes, and so on, 1,750 each. And then with the business risk reviews, $1,500 for a review and $3,500 for a risk implementation. Now, if we go back to if we just pull this up, if we go back and think about our revenue growth equation, I'll be back there in a sec. So we're talking about how many clients, how often they buy, and how much they spend with us each and every time. So this formula that we're focusing on here, in terms of looking at what our revenue is going to be, just uses that. How many clients, how many new clients, getting them to buy from us more regularly, and how much you're going to spend with us each time. So let's say that out of those 1,500 clients, they expect, or they're going to target to get 10% of those new clients current clients to do an estate review. So that gives them 150. And out of their business review, they're only expecting 5% of clients to take them up on that. So they're going to do 75 business reviews. Out of those existing current clients, they'd expect that 30% of those 10% will then lead into additional work. And out of that 5% of business risk reviews, they'd expect that 50% of those will turn into some sort of work. So automatically what they've done is they've set themselves a target. They've said, we want to open up 308 new matters from our specific activities that we're implementing to drive an additional revenue of 435, just from existing clients. So they then build their action plans around that. They'll consider, how are we going to do that? They'll think about it from the point of view of the revenue matrix and say, well, we need to think about, we've got some products that we've developed. We now need to think about what our marketing and sales activities are with those clients, and we need to better engage with them around managing the relationships so that it's easier for us to sell to them. And then they also focus on new clients. So they've got 100% of that 100 new clients that will take them up on an estate review. But out of those, there's expected that 75% of them will do some sort of estate planning implementation. And then out of their new clients for business risk reviews, they're estimating they'll get that 26, and then out of those, 85%. So I've got higher conversion rates there in the new client category, because generally when you've got new clients, they're going to have a need that you've got to meet, and that's why they're coming to you. With existing clients, most firms have got those in order already for clients, and they're just really needing to work with those people where there is some change that's happened. So overall, these guys have then developed a sales strategy for their firm that says, we want to create an extra $757,000 of proactive revenue from existing and new clients, which is over 531 matters. We've developed our product, we know what we're going to do, we know who we're going to target for them, and we've set ourselves some targets in terms of numbers. So when you think about it, this breaks down to just over 10 matters a week. It means that we're going to look at getting 250 estate reviews done for the year, and we're going to really hammer that. And we're also going to focus on getting 26 new clients so that for our business reviews, so that we're also going to be generating additional revenue from them. So they've set the target, they can then start developing their action plans to implement it. And when they do that, they will then go back and focus on each of these key areas and develop the strategies to build systems and processes to make that happen. So as a very general overview, that is basically how you need to build your revenue in your firm. You need to focus on your strategies for systemising your winning the work activities in your firm. You need to have clear definition around what your product is. You need to have clear definition around what your marketing strategies are that get implemented to produce a predictable sales result. Because if you're not doing that, then what you're doing is you're living in a world that you can't control. You're still going to get your reactive revenue, but you will not get any growth in your practices. So for everybody who's listening today, as I always do with my webinars, for the first 15 only to email me today at matt@fwo.net.au. We'll schedule in a free 45-minute online meeting to discuss your firm's proactive revenue plan, where we'll sit down and we'll talk about what you do in your practice in terms of generating revenue, what activities you implement, and then talk about what it is that you might need to be doing. So if you just want to take me up on that offer, absolutely obligation free, matt@fwo.net.au. Also, as the lawyer's accountant, please visit our website, financiallywellorganised.com. There you'll be able to get information on our annual accounting service, which is a fixed fee for our clients. You'll be able to register for our free FWO legal firm membership, which provides you with some a number of benefits, including an early bird registration for future webinars. We run our FWO Growth Club, where I get up to 10 firms to meet on a quarterly basis to develop and implement strategies in the firms. And you can buy now the Revenue Revolution for law firms, where I've covered off everything that I've gone through today, plus a lot more in a great amount of detail. Our next Grow Your Law Firm webinar is Marketing for Legal Firms, so you can go on our website and register now. If you've got any questions or inquiries, please feel free to email me or call me. I'm located in Brisbane, but I have clients all up and down the east coast of Australia, so please just drop me a line. And as a final reminder, I've got my book launch, The Revenue Revolution for Law Firms, on Monday the 25th, 12 noon Queensland time, 1 p.m. Southern States time. Still wishing we had daylight saving here. So just register there, but the book's available online now via our website. So once again, take me up on my offer to have a free 45-minute online meeting. Look, thank you very much for your attendance today. Please join me next month for Marketing for Law Firms, where we'll get into the nitty-gritty of some of the activities and actions that you can implement in your firm to start your marketing in a proactive way to drive revenue. So thank you again, and we'll see you next month.